Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the silver price action on Friday staged a very impressive rally due to the fact that the disappointing US non-farm payrolls in May came in below expectations of 185k and the data released was at 138k. This in terms gave first of all gold a potential strong rally, and also you can see now that the silver has taken out that level of 45 and now pressing on towards 1760 with a high being 57 this morning. I should note that the fact that the indicators are overbought, and also to take a note that I expect to see this rally from $17.60 or even stretching to stop loss potential of 17.85.90 to fail and look back towards the downside. Now the support comes in at 17.25 and firmer, and likely to find demand from 16.95 and reassess from there. So with the gold pushing through the resistance on Friday at 12.72, now it looks up towards the next target, which comes in at minor 82 after seeing a high of 81 this morning, and then towards a firmer resistance at 12.85. Now, like silver, I do like to express that we are overbought, and also we could see eventually a rejection from either from the 82.85 area or at a stretch towards 92 to 94, where I've highlighted here, and then see the market turn around and look to immediate support of 12.76. Now it is viewed beneath 68 would give further weakness to the gold and look towards a potential target of 12.57 to 58 and reassess from there. Well, the Australian dollar benefited from the weaker non-farm payrolls on Friday and rallied on now to challenge this resistance level of 74.50. In light of the current pattern, I still like to heed caution to those that are bullish due to the fact that the indicators are clearly not supporting this move. Now I do expect to see good supply coming in either from 74.50 or above at next target, which is clearly around, as I put it in here, at 75.15.25. Also note as well that this week we have a massive week of data. First of all, we have the RBA tomorrow, monetary policy decision. It is expected that the rates will stay at historic lows at 1.5%. Then later on in the week, we have the Australian Q1 GDP on Wednesday, with the forecasting at 0.3. Now, the previous release was at 1.1, along with the trade balance. And also to note that we have China's Cajun PMI out today. And also later we have the CPI out this later on in the week. So as I mentioned, I do expect to see the market eventually turn away from this region and look down towards 73.85 and firmer support coming in still beneath there at 73.15.40. Well, the euro, as you can see here, is pushing further towards the top side after the US dollar took a crippling blow on Friday from the disappointing US non-farm payrolls. In light of the current pattern, although I do expect to see this level of 112.80 figure hold, I still be a little bit cautious that if it breaks above the 113 handle, then I have a neutral view and see how the market plays from the break. Above there, though, I see targets of 113.60 to 114.60.65. But as I mentioned, we could see this level hold in the short term. Now, to turn this picture around, we need to see a break of 111.70.80. This in terms would see further exposure to the downside and bring in a target of 110.70.90. Well, dollar yen, very, very weak on Friday, and I've been very cautious all of last week that we could see a fall towards that 110.05.10 established bull base or bull camp. I do expect to see the market to stage a firm defense towards that level. Now, If we get a strong rebound, then we'll be looking at the new target of 110.90 and then towards 111.65.70. In the event we fail to see this level hold, then this would see further exposure to the downside and bring in a target of 108.80 to 108.35. And to round off with sterling, well, we've still got the concerns of the UK election this week, which is out on June the 8th. The market is likely to stage quite a whipsaw price action. So for those trading it, I do heed some caution that the fact that we can easily see the parameters reach from 127.10 to 130.60 and be very, very whipsawed. Now that being said, I am holding to a negative bias with the immediate support coming in at 128.35.45, and a break beneath there would give further exposure towards 127.65 to 127.10. The intraday, as you can see, the market over the last four consecutive days has respected that level of 129.20.30 and may do for the start of this week to see how it plays out. So that's a wrap. Thank you very much for joining me. I hope you have a great day and a great start to the new week.